All right, let's jump into it. A bit of weekend review. Wow, where to start off on that? Because really, we just absolutely ripped into that close of the week. Metals, major breakouts, silver, gold, obviously our main ones. We've got a recovery in copper coming. We got Aussie trying to hold the lows. DXY finally sort of giving up a little bit of a pullback. Well, give a little bit of the gains and that in a slight pullback, but still, if this thing goes down, there's some major upsides on things to come. And that's the thing, it's only come down a little bit. Gold's already been pushing to the top side over here. So, look, we'll start off with gold because this has just been an unbelievable trade. I mean, we started long all the way through here, started shorting back here with a target of 2,600. It's 61%. That sort of like magic sort of number to come back to, and that bang, pull back, buy zones, and we've just absolutely ripped along. And look, admittedly, these last little bits through here, it has been a bit, oh, are we going to get it all? But as I sort of do, and this is the beauty of doing these things day in, day out, week in, week out, particularly with these weekend reviews, we get these big ideas and these big pictures, and we can see these things developing. And obviously, lower time frames, we can see inside these candles as to sort of where we're going to trade it intra-session and intraday kind of thing. But the overall picture is that of bang, move up, pull back, breakout. So, as I said, two price targets that I've been looking at, I've been sort of calling. The first one, well, majorly main sort of one was this 27.30 to 27.40. This is off the idea, as you can see, that we've got this flag that came up through here, pull back, break, retest, took out the highs, and away it went. And it just absolutely rocked into close for the week, as you can see here. And the second one, this isn't the level that I sort of pulled out. And I guess if you look at this, possibly on the weekly, it might stand out a bit better. No, not so. I mean, look at this. It's just crazy. This move has just been insane, like coming through. And you can see time and time again with it all hit those sort of price targets. But um, yeah, as I said, the second part was if you take it from this big consolidation area down here where we had back around 25.30 was the breakout level. If you take those lows and then drag it up to the top and the consolidation, then that gives you a price target 2,800 or 2,815 and change. So, certainly some decent sized targets on the top side over here. RSI on the daily definitely got room to support it to move a little bit more, should it want to sort of continue and keep running up into sort of like above the 80s before it sort of, can either flatten out, pull back, whatever it does once it gets up there. But I would definitely say that, this is breakout. There's no questions about these things now. It's a solid breakout. Two daily closes above these areas. And this is what I was saying. If you look at the Friday video, what you want to do is you want to see the candle do what the other candles haven't been able to do. And even as we got to here on the Wednesday, you can see that this candle rejected similar to these ones over here. But come Thursday, bang, that's a solid breakout. And the pullback in terms of a daily candle, you can see barely moved at all. I mean, that's an open of 91, pull back to 90, and bang, away it went. And that's again, that's only a $30 candle, which, $30 candle on gold is a fair move, but it's not like unheard of that this thing can run like sort of 30, 40, $50 in a session. So you know what I mean? I think there's definitely still some upside here. I don't think this is going to be the kind of one where we go up and then we just see a bang, sell straight back down. I mean, look, anything's possible. But as far as the normal sort of structure and candle setups go, when you've got these big long candles and you're closing on the highs, this is giving you a little bit more of an idea that the people that are buying, they're not looking to take profit too quickly. You're not seeing a segment of the market push back down quite yet. We did intradays. If we get down onto the lower ones here, we can see, certainly I was part of it as well, sort of like selling around these areas. And it just kept on going. Tried to get back on board at 98, missed, and came to 2027 01, and then obviously just legged on there further and further. But look, all in all, very bullish, overbought. This is down to the 4 hour here, so that's the overall picture of gold. What we got to sort of try and do is think, okay, you don't want to buy it straight away and then buy the top. I mean, look, maybe this will gap up. I mean, this is a very bullish close. There's going to be a lot of talk and chatter about this sort of stuff over the weekend, and that's even before I got to silver. But this is obviously sort of solid breakout. you want to try and find some safe level where, you know, you got to pull back and you got an idea that you may serve. Because remember, the way that it's going to work, like all these things do, you're going to move up, you're going to find resistance. Where the resistance is here or here, up here, who knows? But the point is, you're on that pullback level here, then you want to get in with a better risk reward from here to catch this leg here. What you don't want to do is find that you buy the high here, pulls back here, you get this leg, but this leg only ever comes to here, and then you never just, you know, you're stuck in a wick kind of thing at the top over here. So I think sort of the plan of attack is to look for where we may be able to get long, so to come Monday. And to me, if I can get it 27.06, I think that's a decent area to sort of say, hey, look, you know what, retest the highs, you've got $15 move through this leg here. If it keeps going, well, which it does look like it's going to do, well, there we go. We're on board. We got a better price than buying from 2021. Get back along here. I mean, this is just 4 hour. There's a bottom wicks there. There's also an argument to sort of say that, you know, 27.12 depends how hungry they are for it. And as you can see at the moment, it just churned on through. So, you know what I mean? I'd be reluctant to buy it straight off the bat, but definitely be looking for buys on some sort of pullback through here. Excuse me, if you do get back down to these levels over here, at say like, you know, 2700 or so, I think that's also a buy. So look, I would say sort of through this area here, you look for how the price actions panning out. You look for the candles to go a little bit smaller, like this here. We've got big candles, and smaller, 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 and then look for it to push out. So I think sort of as it comes back through here, early hours of Asia session, if you can see some entries around here, that's the time to sort of try and have a shot to catch for this leg to then sort of push through and see if we can keep this party going and moving to the top side. So yeah, gold very much big breakout. Like that is just, I mean, if you go through and watch all my videos, that's what I've been saying. And, you know, it's been the last couple of weeks, actually the last couple of months, been very profitable for playing these, you know, not just the long side and that, because of course, you know, I mean, if you look back through the videos, I'd be shorting this whole area through here. Majorly, I think I even caught the longs through this part. But, you know, this is the whole point. Doing the plans on the weekends, doing the plan during the week, checking yourself, seeing if you're in tune with the market, and then yeah, pretty much sort of trying to attack it where we can. So that's the idea. Look for the pullback come Monday. If we find a good entry, look for it to get on board to find this leg coming up here, because I do believe we do have upside coming on gold. Flip across to silver, because silver was just the ripper. This is the one. If you look at my videos and I say the key for this part here is going to be seeing a candle do what the other candles haven't been able to do. I said, we get a close. I've said this all along. You get a close at 32.50. If you actually look back, I know a lot of preachy kind of stuff here, but this is the whole point of it. This is the move that I called when we were down here. We were down at 30. And I was saying that sort of you get test it, goes through, comes back, takes out these stops. Up here, comes down, takes out these stops. I'm talking technical textbook stops here. And if you look at the video, so it would have been around the 10th of October or so, 9th to 10th of October this year, this year, like 11 days ago, I was saying that this is the move that we're looking for. If we come back up here a third time, I said, if we come up to this level here, we get a close around that 32.40, 32.50 area, that's it, we're going. And that's what we got. If you go back onto the 4 hour, and this is again, I know it's preachy, but this candle here is the candle that did what none of these other ones could do. Every single time it got here, it was sold down, sold down, sold down, sold down, sold down. This is the perfect example of what I talk about. You want to see a depletion of sellers at this level. We've seen them time and time again. They were holding this exact line through here. It was unable to sort of get through. Then, once we see that candle go through here, that's where you go, look, this candle's done what these candles were unable to do. We've seen a depletion of the sellers at this level, and look at the follow through afterwards. Absolutely monster move with silver there. And if we look at this, where are we at here? So what's this one relating to? This is our drop down from here down to, this last drop coming down here. Bang, up at the 127 continuation there. So look, again, same with metals, same with gold. I do believe we've got upside. This is insane. This is stop city. So this is very reminiscent of, where's the other move that we did this? So over 29. So it's coming back here. This is it here. This move here was insane. As you can see, like this was a 9-10% move from the breakout level. And this was like previous highs. So we sort of see it, think about it. Once it went, bang, it just went and it just rocketed up 10%. Obviously, eventually, well, came back, had another shot, and on it goes with the story. So now we sort of think, okay, how are we going to see this? How are we going to sort of play this come now? Because this is the same thing. You got a very tightly held resistance line through here. Once it broke, backtest, bang, and it took off. So look, I do think we've got upside over here. I would like to sort of see 34.30 or so, that area get touched up. So I do think, there probably is some limit to this area here. I don't think we're necessarily going up over these levels. Like if you go back on a high enough time frame, I'm pretty sure 34s or 34 and a half, 35, this area, we've got some pretty strong weekly resistance. So why not? Let's look at it. If we go back here, we're talking multi-years, because if you look how far back here we are, these are the levels that you could expect to see some pretty strong resistance. So if we like bang this through here, do this, excuse me, make this resistance, boom, we could shoot it across. We could see where these and we're not talking like small time stuff here. We're talking back to October 2011. That's big stuff. You know what I mean? Like it's it's 13-year highs. I mean, we've been hitting technical 13-year highs a lot of the time, boom, 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 with these sort of things here. Another level here, so you can say, I can't remember exactly what the story was with this, but I was saying, look, if you put the stops above it, it's just going to go and take off. But enough of that. That's the big story. So now we've got some levels. We've got some areas where we know these are the big weekly levels. So 35, 35, 40. They're your kind of top end targets. Look, I think there's an area completion of this measured move, the 161 retracement. These are also going to be little areas where we could see some selling sort of coming through with this. But this is a big breakout. I would say, though, the reason that this is just chug, chug, chug is very much stop status. So I wouldn't be surprised, unless there's something, or even if it does give it a gap up in the month, we look for the pullback. And we look, okay, where potentially could we be seeing? I mean, could we see something back down to 32.90? Maybe. That's 70-cent pullback. That's fairly big. That is the wick highs of this previous attempt, only going back a couple of weeks in that, start of October. But I would say that potentially if we sort of look at something, let me just say, just this last move, this little section here, and we go, okay, where could we sort of potentially look? Honestly, even if it did come back to 30, say 33, 32.80, this kind of area here, we're still at a 38% retracement, and that's a bullish continuation level. So I would much rather, get long at this area down here to then again potentially catch this. Even if this goes for a lower high, double top, higher high, you've got much better risk reward getting in from these lower levels. The flip side of this is you might miss it. Oh well, if you miss it, you're not going to lose any money at least. It's just that opportunity cost. But the thing is, if you weren't trading long through this area through here, well, it's a bit late to be sort of first time jumping on first thing Monday morning. That's the easy trade to sort of knock people off there. So look, I wouldn't be surprised if we do obviously see some pullback again. As to how deep, that's anybody's guess. But I would say that sort of even if we do come back to 33, it's a round number, a little bit of an overshoot, 32.80. Like you see some fast profit taking. I think this would definitely be bought up, and this would be an area that I'd be liking to try and sort of get long with it as well. But very much like it's a textbook sort of setup, and these are the kind of things again. The analogy of the beach ball. You push it down, it pops up. You push it down further, it pops up, it comes up even further. You push it down even further, well, eventually it's just going to go pop and bang and shoot out the top side. And that's obviously sort of what we've seen through here. So very much a solid close to the week on metals. And this is the thing as well. Now, that's the idea. We look for the pullbacks. We know that. If we look at DXY, we look at sort of what the plan is through here. This is what I've been saying, that even though metals were pushing at their highs, DXY wasn't giving up much, or vice versa. DXY was pushing at its highs. Metals obviously weren't struggling. So my feeling is that this has potentially got a big way to come down here. And look, mate, in the whole scheme of things, I mean, as I keep sort of following it, you come back to the 50% or 38% retracement, that's still somewhat a bullish, as you can see, an idea for a bullish continuation. The metals are already breaking to the highs before you've even added this flow into it. So if this does break down here and kind of starts to really move back here, these are the kind of things that could get gold to 2,800. These are the kind of things that get sort of silver to, 35, 35 and a half, whatever we sort of found. What did we look at it a second ago? Into this, 35, 35 and a half. Still another 200 points to the top side here. It's not going to go in one straight shot. This is more stops being hit that got it moving so fast. But the idea is that if you sort of sell off the US dollar here, because the people have been sort of making very short, sharp profits through this 3-week period of pushing up and just grinding up, that you could potentially see the flows come out of this. People go, okay, where am I going to put it? You look at the metals are moving. You've already got people buying metals. That's a good excuse for them to go up another leg as well. Because the flow, that's the thing. The money has to be somewhere. It flows from one market into another market. It doesn't go just one to one. It gets dispersed and moved around, of course. So, you'll see Euro will appreciate. We'll probably see Aussie's a little bit different, but, it will, if it does continue to sell down, Aussie will eventually get more of a pickup from this kind of thing as well. But what I'm sort of saying, even as I sort of talk with this stuff now, this was the area that we sort of picked out. We said, look, this is what we want to break underneath. Reason being, just as a recap, we had negative divergence, 4-hour negative divergence, moving up the top side here. We had a little bit of this wedge set up. This, I called at the time as an overthrow. So you've got this area. It should have sort of rejected here, but of course you had the retail sales. Retail sales shot it out to the top side. So I called this an overthrow with negative divergence coming into the 61% retracement. For me, that was enough to sort of say, yep, that's it. This is the top. That's 3 levels, 3 ways of looking at this to sort of say that this needs a cool off. Comes down here, hits this level where we know buyers are. We can see it. This is the little launch pad. This is the retail sales candle that sort of got it shooting up to the top side there. So we can see, we know that, here's been buyers, so it comes back, and, here they are trying to hold it again. Wasn't able to close down underneath here. Yes, it's through this rising support, but hasn't actually sort of closed down under here. So my feeling is, and this is the way that I'll be playing this come Monday, that you'll see that, okay, this broke, but again, we don't really consider the last candle of the week too much, so ignore this one. This one kind of technically held that level. If that was a zone, and we say this is where the buyers are, well, this candle wasn't able to do what these other ones weren't. It's slightly different, but it's the same story. I think that this could give a little bit of this sort of reprieve push up and then a move down. And this is what I think will be the thing where you'll see the flows come from here. You'll see metals push back a little bit. Maybe people take profits on their gold and their silver moves come Monday morning. This pushes up a little bit. Then they go, hold on, wait, yeah, that's right, gold's in massive breakouts. What are we doing? They start buying again. Flows come out of here, push down. This will also potentially give you a bit of a head and shoulders. If we can find out where the hell the thing is. Whatever I do with this one. Point being is, say this little level here. Very awkward looking shoulder. There we go. Something to this sort of effect. Potentially. You know what I mean? This could give us a bit of a retest of the underside of this falling resistance. It could give us a little bit of a right shoulder with a head, very well-defined neckline, breakdown. So the idea would be profits from metals back into US dollar. They go, okay, sweet, let's do it, boom, and then they on with the charge down like this. You're still looking for this move once you get under this level. So this won't necessarily go like this, won't definitely shoot down. But this is just emphasizing the idea that we could be going up before we come down. But whether this sort of happens straight away down here, this is still the level, this is still the plan that you want. You want a break of this level. I think this is a nicely defined ledge. And then a retest to the underside, and then as we put this one here, a second break. So a lower low after the break and the retest. That's the criteria to confirm this move coming down here. It doesn't mean that we've got an all-time high. Whoop, so let's put this here. Let's call it a measured move. This one here. This would then give you a measured move down to this level here, which, as you can see, lines up pretty well with where the market has been buying it previously as well through these zones through here. So that to me seems like a nice little sort of structure set up, sort of a roadmap for what potentially we could be seeing with that DXY sort of come Asia session on Monday. As you get down into these levels, well, you play by ear and you see what's happening. You see, who's hitting resistances, whatever, and you try and sort of pick out that stuff there. But if we see a push up on DXY early, to me, that'll be a nice little sort of upper candle to then sort of look for a flip. And once we take out this level here where we've got the alert, I think once this alert goes, then that's going to be, okay, moving down. And look, we're still only looking at 103 as a pullback there, which is the 23% retracement of this entire move up to the top side here. So, again, you look down here and so you get this. If this does play out, this is, a lot predicated on that this flow will happen. You'll get the inverted, not the inverted, you just get the head and shoulders. Measured move comes into a horizontal area of support, which was previously resistance. So through this area through here, let's do that kind of thing. And we go, okay, well, if that does play out, coming down here, you're going to see people go, well, this is a nice little area for me to get long, if they're looking to get long, on their DXY positions, US dollars. 23% retracement, still very bullish pullback. Some people don't even consider that as a pullback because it's so shallow and it's so bullish. But 23% retracement is not like, wow, okay, anything's wrong. So this is very plausible that even if this is going to go further and go up over here, for instance, let's say it goes to 104, even a healthy move to 104 would require some sort of cooling off at some point. But point being is, comes back here, you've got completion of the head and shoulders measured move. You've got a horizontal previous resistance flipped over to be support. As we know, things don't go through first time. Remember, every time it comes to it, it's going to have to touch it. You're going to see a segment of the market take profits, move up. You're going to see people try to buy it off the 23, moves up. The completion of that move. So there's a good idea that this would be an area where we could see a little bit of a pushback and pushback up here, and then maybe we could drag something across like this, and sort of say that might play another sort of resistance. Maybe get an even bigger head and shoulders working inside that level there, and maybe that works out. We'll see. Let's deal with that when we get to it. But to me, that seems to be a fairly decent little plan of attack. That if we see a move up, that's the area to sort of buy the other positions, buy the corresponding positions, and look for that flip and break and sort of taking out this level and come down here. And then through this period here, we look for continued USD weakness till we get into this level. Then we start to take some profits and we reevaluate how the market's acting around these levels. So that's my sort of plan of attack, and that with the XY moving forward, and obviously corresponding pairs. So let's flip across. How can we use it? We got Aussie. So Aussie, pretty much. Look, this is why we sort of do these little things. It's moved up here from the lows. We said we come up over here. I said, look, it's going to be hard getting through this area. This getting just back above 67 was a bit of a struggle, but you can see, boom, pushed it down, boom, pushed it down, boom, pushed it down, and bang, popped up through. But again, even with US dollar sort of getting a little bit weaker, Aussie has cracked some crucial levels. So it's, you know, these kind of things, they're not easily forgiven. I know it sounds a bit sort of, you know, I don't know, tinfoil hat, whatever. I'm trying to think of a colourful phrase for it, but this is how I view the market anyway. The fact that you break the levels means you need to pay the price. So it doesn't mean that sort of like, okay, you know, you've broken down here and then, but yeah, look, there are fake outs. And we know that Aussie on high time frames loves its fake outs. If we go back to, I'm not sure if I've got on this one of these ones, I marked it out with the sort of fake outs that they do. But I mean, you can see it straight away. I mean, this level through here, that's your support, bang, fake out, all the way to the top. These kind of levels through here, fake out, bang, up to the top. This is just, you know, crazy isolated thing. But certainly, if we look at this on a weekly time frame here, another lower wick and then a break of that high of a previous weekly candle, I think that could see some recovery in Aussie. So this little box, pretty much where we've got it dragged out. So, you know, the top of this weekly candle, that's where you're going to want to sort of see it get above to sort of say that, okay, you're seeing a little bit of recovery. So let's move an alert there. Yeah, strength. Boom. Where have we got it? 67. Let's call it 55, and let's make it at 55. Get above 55, I think, you know, we're looking okay for a potential move up into this leg here. Because as I keep sort of saying, you know, with the flows, you find resistance, support. This leg here always has to come. Not, well, I mean, 90% of the time, 99% of the time, always has to come. This is where you're going to get your lower high, and we know that, okay, then it's failing. Double top, well, okay, we got a range. Or higher high. We got the high high, finds resistance. Back down here. Would have liked to see it hold this support at, you know, mid 67s, but, you know, chopped through. We've come down, found support. This is the leg we want to get, but the thing is, you want to confirm this leg here. And through last week's highs, so through 67.50 odd, excuse me, and change, that'll be okay. Yep, we got it. This may very well, though, give us a lower high. And then we've got something like this potentially to play out. But this leg here is where you could potentially sort of make a little bit of money. You just got to be cautious that, you know, it may be coming for a lower high. I saw somebody saying that this could be a head and shoulders. Yeah, look, it could definitely. I mean, that would sort of give you a move back up to the 80s, and you say you got a head and shoulders here. I mean, if that's the case, then Aussie's kind of doomed. If we see US dollar really catch a strong bid, you know, we could be looking back down at 65s, you know, in time. That's not going to happen this week, and so that's not what we're planning for. What we're sort of thinking here at the moment is, okay, this is potentially, we see some, it's off the lows. It didn't close like bang right down the bottom. It's starting to sort of become a smaller body. If we can see it sort of like early, let's jump onto a more realistic time frame. Say early, we see US dollar get a bit of reprieve. We see Aussie dollar push down a little bit here, puts in a weekly bottom wick, comes up here, takes out those highs. That'll be your first move that we're going higher, 67.20. The major one that we're going to sort of confirm is going to be above. Well, we said 55, but even if you look on a 4 hour here, this is the area I'd like to get above, 67.70. That to me will be, okay, yep, we're out. Because we've got this wedge. This has come through here. You know, it's got the breakout. Maybe this will come back down, retest the breakout level. So this is an area where I'd be interested to try and get long again. So 66.90s. This could give us a little bit of a pullback. As I said, it all starts to line up that, say you see some profit taking on gold and silver. You see some little bit of that flow go back into US dollar. That freaks people out that were only trying to get long on the Aussie. Say we see a little bit of a pushback down with the Aussie, down into 66.80, 66.90, these kind of areas. Retest these breakout levels or possibly even come a little bit lower, these kind of areas through here. And then we start to see that next wave and that head and shoulders setup that I was saying with DXY. We start to see that play out. And as I said, think of DXY not just as the basket, but kind of like as US dollar broad, buying and selling across the board. Aussie may not get the same move as, say, the euro may, but if it does see some US dollar selling across the board. It's going to happen a little bit with Aussie as well. Aussie's a little bit different because it's a little bit more risk associated as well. So it may be a little bit sort of retarded with its moves and subdued, but it will still get those flows. So again, my plan is about pretty much the same. Look for those pullbacks early in Asia, find some levels, trying to get long, and sort of try and move that way forward. I think you've got to respect the fact that we've broken this wedge, so we're going to see some push up. The upside could be limited to 67.50s because again, we've seen that held. First time it comes back up here, you're going to see a reaction. It's not going to just chop straight through. So you are going to see a reaction, some 67.50s up here. But, that's still, if you can get this move to come through here, if we can get the breakout, the pullback, the retest, take out the high, that's where you want to be going. And that's all right because that's still a 70-point move, which, is 1.2% or so of a move for Aussie. So it's definitely sort of money that can be made through there. I think sort of that kind of seems to be lining up as a good plan for myself. Flip across, we got copper. Copper came back into life. It has also broken out of its wedge. As you can see, obviously quite strong. It's finding still some resistance where we have got it marked out. This is the level. This is the line to beat for it all. Copper's can be its own little finicky thing. But again, say that this is a little breakout box for us. Let's drag it just a bit higher here. Say this is the little breakout box here. If we can get a pullback to say 439, I mean, look, even if it did come back to this area, we know that this is an area, support, resistance, broke out, has a retest. So if you can get 437 to 439, this little level here, and then look for this bigger move to come through here. Again, look, maybe this comes, so excuse me. Maybe we see this move sort of come through here while DXY sort of sells down a little bit further. Look, it's nothing's ever guaranteed, but this is the thing that I start to say, okay, look, all these things seem to be lining up pretty well together, that we could see a little bit of a reprieve. Now, I've also got to get to the news to sort of see what's going to be the big drivers this week, because obviously that also plays into a factor with these sort of things. But as you can see, I would say that it's happy enough to sort of say that, this is the level that we'd be trying to look for. This falling resistance coming down here around that sort of 448, level 448. Okay, move along. We got USD China, broke this level down here. Now, this level doesn't really majorly count because obviously it broke this a little bit at the start of last week. It did find resistance right on cue where we sort of saw it would be 2 tests of this here. So this is very much a sort of a continuation line should this want to just be a pullback to then go further. That's the level that they need to beat. They need to get above 715. You can see the market sold it from here a couple of times. We marked it out and they sold it from there again. The fact that it's put in a lower low through here would make you think that, okay, we could see a little bit more pullback. And these are the 2 levels that we've marked out that we'd be interested to see where it comes to. See what happens. Close that wick from start of last week. Little bit of a pullback. I don't know so much about the sort of retracement levels with the slot here. But if we even if we come back to this level down over here, that's around the 38%, that can still definitely keep it in that sort of bullish momentum through here. But I would say the idea that you put in the lower low here, albeit it tries to hold it, I would say that this is probably going to see a little bit more of a pullback down to these levels over here. And this, as I said, will potentially give Aussie a little bit of resurgence as well. So we've got to see how that one plays out. But for now, look, it's respecting the charts. These are the levels that we'll be looking at for it next, 709 and 707. All right, quick little things. Let's have a look at that gold-silver ratio. Boof. It's funny. I put this, maybe it's on the daily. I drew this a while ago. You can see where I drew it at this point here. And I put in these things. Pull back in metals. Test the highs. And as you can see, obviously, when it did pull back up through here, this was going back gold to 2600, came through here, and it just fell away, which you can't say that you're really surprised to see the chart look like this, given how strong silver was. So this is gold silver ratio. So as it's moving up, the theory is that you'll have a little bit more sort of upside potential with gold opposed to silver. But really, it's more just sort of like you want to see the whole metals market. As this is moving down, you'll see the metals market move up. And as we know, in a metals bull market, silver will produce better than gold, percentage return wise. And we saw that with the chart. Silver absolutely took off. So again, these kind of things. This is a big, big breakdown here. Maybe you see a little bit of continuation early. Maybe you see a push back up to these levels over here where we see that, there's a little bit of an area that we've seen, the market respected a couple of times. That'll see a little bit of a pull, but like again, as I said, if this is moving down, you see the metals moving up. If this is moving up, you see the metals moving down. If this can come up here, retest this and hold this and then sort of come down like this is what's going to give you your entries with gold and silver as it comes into these zones here. Let's put this down here. Let's make this one retest. Put a question mark on a metal bias because it just means sort of like, that's the point of these alerts and that. You sort of set it up and then, so you got a bunch of alerts going off. You're like, okay, well, that's fine. It's doing that. Drop of a hat. What does it mean? What should I be doing? So you don't have to think. So check the metals. Look for the metals bias as we come back into this area, which could be a very reasonable area. Again, look, if we get this is technical as a breakdown here. I mean, this chopped and chopped and chopped. This was the zone, and as you can see, it was oscillating around it constantly. If we continue this out, what happens if it sort of comes down here? A little bit of an early push from here, comes back up, gives us our entries, bang, we move down here. If this continues and moves down to our major levels, which are down here, let's just drag this across it because this is probably something interesting in terms of a level. Again, these are the kind of things come down here where you're going to see potentially gold be moving towards that 2800, silver towards that 35, 35 and a half, those kind of levels. I don't want to think what would happen if we broke this level down over here, because this, if you zoom right out, is an incredibly big, big level. This rising support, which it held to the cent almost back in June, is something that dates back to, well, look at that, back to 2011, when silver, as we showed at the very start of this video, silver was up around the levels that it's at now. This is where the ratio is now. If it breaks it from up here, it's got a long way to go down here. And this, if you break this here, you don't want to be short metals. If you go through this here, I think there's going to be some serious repercussions for what's going on with everything. I don't know exactly. I'd have to look into it more. But this is obviously a level that support that's sort of held. This is a big horizontal here because this one goes back to 21. You had the confluence of the horizontal with this rising support. If this breaks coming down here, well, obviously, where you're going down, 64 or so next. But as it starts to come down over here, this is where we're really going to be just hammering metals long, buying dips all the way through, because this is a big shift in the market with this kind of stuff. So anyway, that's obviously big forward thinking kind of stuff. But even if you look at this on a weekly and it breaks down here, the RSI's got room to move to come down a little bit lower. Sort of thing, okay, where are some levels? That's a bit of a level, be interesting. So this, again, as I said a second ago, if we have a look at this and we say that this potentially is an area where you might see a bit of a bounce, well, these, previous resistance areas, look for it to be a bit of a support. Things don't break through generally first time. Confluence with this falling support, maybe you get a push up and then you see what happens coming back down over here. But again, these are all just other things to sort of, if you're trading metals, to sort of be considering as well. But I certainly think, there's got to be some sort of reprieve. This is just a complete meltdown. Same, we saw silver just stops. So I would say, look, I'm going to wait for the sort of the start, the open, see how things look. Look for those sort of nice pullback areas, and then look to attack the second wave or third wave, whatever you want to call it. But the next sort of move up through there. All right, have a quick look at the news. Where we at? So next week. This one moving forward here. All right, so again, look pretty quiet on the Monday, bit of China data and that. Looking to drop it 20 base points on the 5 year, 20 base point on things. So, okay, this could, this, I don't actually follow it enough because the thing is that sometimes good news is good, sometimes bad news is good kind of thing. And so the idea that they're dropping rates, your initial thought is, well, we know that we drop the rates and that, well, that's generally negative for a currency. But at the same time, we see that, China's really trying to pump a lot of money into the system over there. And I think that's having a positive effect, obviously, on its sort of the yuan strength and that. So even though it's kind of diluting the pool with it, China's just been bashed down so hard for so long, there's opportunity cost at just how cheap everything is. So more money over there means that potentially you're going to see some of these companies expanding a bit more and hopefully in turn helping recovery for their sort of economy. And then obviously if their economy is doing a little bit better and recovering a little bit more, even if it has the perception of, that's going to help the Aussie. So it's something to keep in mind for the Aussie as that relates there. The rest of the stuff, not really too interested. Nothing through here. Tuesday, bit of early sort of stuff coming out over here. Fed speakers. No, again, not really anything. BRICS Summit, I'm not quite sure how this will affect things. I'll have a look into it. Wednesday, look, we got Richmond Manufacturing Index. Now, the manufacturing, remember the data we got out of the Empire State last week was super weak. Like, it was a very quiet week overall for data. The one, well, not the one, but one of the ones that we did get was Empire State Manufacturing, and that got absolutely creamed. Like, if we have a quick flip back here, we can see how weak this data was. Sorry, one second to find it. Earlier in the week, wasn't it? Here we go. Empire State Manufacturing here. So you can see that, it was expected to tip down anyway. 11.5, 3.4, came in at 11.9. Now that the reason this is important is because that is very weak data. I mean, albeit it's like, it's not right up there in terms of like, your NFPs and your CPIs or anything like this. It's actually even a little bit lower than some others. But point is that, that's a super weak bit of data. And at the moment, the thing that's keeping US dollar pumping up is the idea that they have, strong data, meaning that they don't need to do more cuts or they don't need to do larger cuts to help stimulate stuff. Yet the US dollar kept grinding up. That's what made me a little bit cautious and iffy about it because you know what I mean? The idea is that if they continue seeing weak economic data, the Fed's going to be more inclined to lean more dovish with higher cuts or higher talk of higher cuts. And that is obviously what is going to be sort of weak for the US dollar. Yet it's US dollar DXY kept sort of grinding up. Yeah, there's other stuff involved. We had ECB, but that was only 25 base point cut, and that was highly expected anyway. It wasn't like a shocker. So it made me sort of think that, like, even though it was going like this, people jump on with their positions, they keep grinding it higher, stopping them out. And I've said this the last couple of weeks that I sort of believe that this whole DXY move is a bit of a short squeeze. Yes, it broke the technical levels, and you need to respect that, as I was saying before. You need to respect these things once they break. However, this is an unrelenting move to the top side. It didn't give people a chance to get off if they were on the other side. So it just kept squeezing higher. Looks like it's about to fall over. Now I do believe, as I said, with those kind of setups up here, that we do have a little bit of a top up here. And I do believe we're going to be seeing some USD weakness coming through the next week or so. Let's go back to data, or the upcoming news. So yeah, anyway, that was just interesting. So where were we here? can't remember where we're up to, were we? Anyway, um, kind of US data. Jeez, I'm all over the place at the moment. Anyway, whatever. The whole point is look for that US data, and here we've got Richmond manufacturing over here. That's what I was looking for. Super weak numbers. Yeah, it's expecting this, even though this is a very weak number, it's looking to potentially move up. If this then turns around, comes in minus 25 or so, that's again, you got to start being aware of that these things are weak all across the board. So that'll be an interesting one to sort of keep an eye on. Although it's not the big major sort of data, it's just another one that you want to sort of get a bit of an idea of what's going on with it all. We got ECB, we got Lagarde speaking, moving through. So we got okay, 50 base point cut on from the CAD. Um, this will be interesting because you know what I mean. Obviously, so the US, the Fed, they just did their 50 base point cut. I always believe that you get a little bit of proxy action from these sort of things. So as in like euro and pound and Aussie and New Zealand, and in this case USD and the CAD. So I think that this could potentially be something obviously worth paying attention to as well. The fact that they are predicting a 50 base point means that the shock will come if they don't do it. If they do a 25 base point, that'll be the shock, and you'll see the reverse, and you'll see, obviously the CAD will strengthen off that, but a bit. And what's important to us is the flow with US dollar. That may also sort of balance out a little bit as well. So that's something to keep an eye on. As I said, the shock there is if they only do a 25 base point opposed to the 50, but you may see some positioning coming into it with the idea that this happens. So, you don't wait till sort of, 12:30 to make those positions to accommodate for that. If you're going to price it in, they'll be pricing it in at least a day and a bit before, at least. If not, as we saw with DXY, they've been pricing it for weeks, months. Moving forward, what have we got? It's got a little bit of data, but still, Aussie's very quiet. Not a great deal. So we got PMI. So I guess this is their PMI week here. Remember, PMI's baseline is 50. So above 50 is expansion, below 50 is contraction, and further away from 50 is the stronger the number with it all. With these kind of things, you want to see high numbers, obviously. High numbers is going to show that, economy is still ticking along, it's healthy enough, we don't need to do cuts to stimulate, i.e. play it out. That means that, it's going to be a little bit more sort of hawkish for the market. And then we got sort of, Euro, German, the French, PMIs as well. Same story here. Everybody's looking around the same. No sort of drastic. Again, most of the time when you see the massive miss, that's when you see some fireworks with these ones here. US Friday morning, ticking along there. Normal sort of unemployment claims, still around that 240 area, but not a massive change expected there. But that's definitely one, again, to keep an eye on, because the last couple of prints, I think they got it quite wrong. Yeah, there was this one over here. They were sort of thinking 225 to 231. They missed massively, and that impacted the market greatly because that came out, I think, the same time as CPI, maybe. And I think that was really probably the overall sort of mover with that. Again, revised up to 260. They actually got this right on the money. Good on them. You don't often see them actually get the estimates right, but 240. So they're expecting pretty much a flat. So 241 to 243. So no real shocker there. The shockers come when this comes in at 260 and they go, oh, geez, wow, actually everything's worse than we thought. Play it out. Does that mean they're going to cut, or does it mean they're going to hike or hold? Well, obviously it means they've got to cut. They've got to help out. So that's how that number is important. PMIs, same deals, as I said, with the Aussie and the rest of them. Flipping through, we got CPI for Japan. Yeah, look, that's a reasonable sort of level. I haven't actually followed their CPI as much, but obviously traditionally, Japan's got a very low inflation. So yeah, sitting around these levels, that's about standard-ish. I suppose we can have a look at the previous ones. Okay, so they tipped up a little bit, so it's actually looking to come down a little bit more for them as well. Moving through to the end of the week, and durable goods orders, not a great one that I sort of pay a lot of attention to. All right, so yeah, actually a little bit more news this week. No sort of major top tier ones, no CPIs, no NFPs or anything like this. PMIs are probably going to be the ones that move the market the most. And then obviously, so to keep an eye out on those other ones that we can sort of plug in. All right, that's it from me.